Welcome everyone to the Kendall Report. I'm Bob Kendall. Before we get into tonight's video, make sure you subscribe and like these videos so the YouTube folks know I'm doing a good job for you. Let's get into tonight's video. We went through yesterday. We saw an interesting day. We traded down to that key pivot number, down to 43.58. We had a low of 54. I'll go through all the details and the technicals here in a few minutes. But there was a lot of rhetoric running around the markets yesterday. It was all about the Ukraine and Russia and the invasion and all those things. The algos were picking up on that. Literally mid-session, we had a big sell-off come in. Supposedly the president of the Ukraine said that Wednesday was invasion day and everything sold off. Evidently, he was being just facetious about the whole thing. He wasn't even serious about it, and that's the kind of stuff that we're trading on right now. We just can't even think about the algos picking up some fake story and running with it. So you have to wonder who's putting this stuff out, right? What is the whole goal of all this? Every story was around Ukraine, and Russia. Yesterday we looked back, we had 9 of the 11 sectors were negative. And so we did see a further rotation to the downside, even though the numbers were sort of mixed. We had the S&P down 0.5, NASDAQ unchanged, and then the Russell was also down 0.46. So we did see some negativity in the indexes. They were down worse at their lows, but rebounded to close somewhat moderate in the middle of the session. But we saw Bullard come out yesterday, basically say what I've been telling you, is that, you know, we need a more aggressive move on the interest rates. He's talking about a 1% move by July, which is a joke. It should be a 1% move by March, right? There's a lot of things going on out there that are starting to accelerate, and inflation is certainly one of them. So speaking of inflation, we have PPI coming out on Tuesday morning. That's expected to show a 0.5 increase, but guess what? That's what we've already seen from the viewpoint of the CPI, right? But it came in worse than expected, came in at 0.6, and then they revised the previous month, and it was pretty bad at a 7.5 annualized rate, year-over-year rate. So we're looking at PPI coming in. We'll see what kind of numbers we get, but if it comes in hot as well, there's a lagging effect with PPI. That's the producer prices that flow over into the consumer. So that could implicate even more inflation going forward. As I've been saying, I think the Fed is right on the edge. They're going to have to get into a panic mode and really start to be aggressive. What we're sitting here right now, they're still expanding the balance sheet. They haven't really tapered yet, right? So we've got another month of that to go on. So it's pretty ridiculous of what we're seeing here, and I won't trash these folks anymore. Maybe Bullard is one of the better of the folks out there. At least he's willing to step up and say what really needs to be done. I think he's outvoted no matter what, so I don't think we'll see this 1%, but we'll see what comes on. 2-year is pricing in like 6 increases at a quarter a pop. I think they do some 50s in here. They're going to have to be more aggressive once they stop the tapering. They've already made that clear. That's when they're going to do that. We'll look at a couple other things here from the standpoint of what happened yesterday. We did see the yield curve flatten some more. Yields popped up over 2%, but the 10-year finished about just under 2%. I'll go through all those details here in a few minutes. We have earnings coming out. I don't see any real material earnings until we get to Thursday, and I think that will be much more impactful as we've got some bigger companies. I'll discuss that in the next couple nights' videos. So let's go ahead and let's take a look at the WaveTech database. As we look at the WaveTech database, what we're seeing here is that we did get 2,798 sell signals, 120 buys. So we had a negative rotation again. We're back to 2640 on the bullish percent. We were up at 40% just 2 sessions ago. So a lot of these symbols that came into play have just rolled over and we're back into neutral. 22% is a number that we want to watch from that standpoint. I don't think we'll get a lot under 22%, but it's possible if we continue to see a pattern that I'm going to talk to you about in the technicals here in just a couple of minutes, because I think we could see an expanded or extended, is a better word, pattern that could unfold. So let's go ahead and get into the technicals on the S&P. Taking a look at the S&P futures, we're up 10.25 overnight. We're 4404.25. That is around the higher ranges that we got yesterday. We got to 4428 on the upside, so we're moving toward that number. We look at the market grid for today. 4418 is R1, so we're not quite there. That would be just below yesterday's pattern. And then S2 right now is 4342. That would be below that 4358 number I talked about yesterday. In yesterday's action, we traded down to 4354 and bounced out of there on the live trading room yesterday. We did see a couple things happen that was interesting. We traded early in the morning down to 54 and then rallied up, and there was this rumor, as I mentioned, about the Ukraine president saying that it was invasion day on Wednesday. Well, we traded back down and we printed 57, so we did not make a new low in the session, and the market bounced all the way back to 4404, pretty much right where we're trading right now. So it's been a bit of a move back up in here. We look at the PPMs here, though. We're at a minus 0.29 on PPM1, PPM2 minus 0.26, and PPM3 is stable here, and that is based upon the 40 period moving average. So here is the scenario that I want to point out to you from that standpoint. My expectation is that today's action or Tuesday's action will be the pivot day. If we close higher, and specifically if we close above the 4428 level, that would be a close over yesterday's high. We should get 2 more sessions of higher prices, so Wednesday and Thursday, and maybe a decline starting back into Friday again. If we happen to close lower, and more specifically, if we did close under 4358, then that would set a tone for at least one more day. So we would have a 5-3-5 pattern unfold if we close lower tomorrow. If we close higher, we're going to get 3 days up, and then we should get 5 down. So that would be Tuesday up, Wednesday, Thursday, and then start a 5-day pattern would carry us roughly into next Thursday of next week. We do have some earnings and things coming out today, but I don't see anything material, as I think I mentioned earlier. That is not on the table right now, but this pattern is fairly significant. So as I look at the NASDAQ next, we're seeing the NASDAQ up 55 handles right now, 14,308. The R1 is 14,362, so we're just about an R1, and we've been seeing a pattern in these indexes, strength in the overnight session, and then as we come into the open, we see a sell-off again. That's been a pattern, but like I said, we are at a pivotal place in the pattern. The only thing, as I've been discussing, is the PPMs on the NASDAQ are much weaker. We got a minus 0.47, a minus 0.41, and a minus 0.21 on PPM 1, 2, and 3. And we have these downward objectives here at 12,956. The similar patterns on the S&P, just to mention that, are down around 4,000, but I think we're going to see a couple patterns unfold until we get the confirmation tomorrow. I can talk more about that, but right now we are in downtrends in all of the indexes as we go through these. So for today's action, we're looking at an R1, possibility of S2. If they do break R1, 14,362, then we probably get an S1, R2 in that case, and that would start that pattern up. But the NASDAQ, like I said, has substantial amount of resistance at 14,612. The Russell is next. When we look at the Russell, we're seeing PPM1 roll over. The downward projections on the charts have stopped calculating, but we are in a downtrend across on the PPM2. That is suggesting that there's substantial amount of resistance right here at 2028. We closed yesterday. This is the cash Russell at 2020.79. So we definitely are right on resistance. If we get above that, there's major resistance around 2116. I don't see that kind of rally coming out of here, but if we do get that 3 days up, we should trade into some of the upper moving averages here from the standpoint of the pattern that's unfolding. A lower close today, we should follow all the indexes, should stair step down in the pattern. So lower close on Tuesday, then that would mean at least one more day down coming into Wednesday. So just mid-roll here on the video tonight. We'll go through the usual stuff. We'll go through the treasuries, crude oil, gold, and Bitcoin. So let's get into that. So we're looking at the daily treasuries. We are printing at 1.96 on the close. I mentioned yesterday we got the RTX sell signal 2 sessions ago. We got an STX buy on Friday, so we got a slightly uptick on Monday here. We should stay sideways within the market grid here, looking around 1.97 to 2.02. We could see an R1, S2. I think there's a little bit of downside in here if we can crack through that 1.97 level. Just quickly taking a look at the yield curve. We did see the yield curve continue to flatten, even though we saw, I think, 2-year was up 7 ticks and 10-year was up 4. So we saw a little bit. This is the 530, which I focus on, as I've told you before, and it continues to be at 0.38 from this viewpoint. Next market I'll look at is the crude oil. Crude oil continues to move higher. We were able to print 95.82 yesterday. 95.50 was that upward objective that I've been talking about for probably 2 months now. So we've reached that. We went through the original objective at 86, and now we're at 95. There's still some higher objectives on the upside. The only thing that I think is going to happen here is we're going to stay within this grid here. So we're looking at overnight down 0.42. I think we end up trading sideways. The market grid suggests that we probably stay closer to 94.52 R1, S1 type range. That would actually print a new high if we printed R1 here. That's certainly a possibility in this pattern. But R1 with the S1 is probably the most likely, and as always, use these numbers as pivots. Next market we'll look at is gold. Gold continues to move much higher, printed up to 76. RXT was 68. So we did print above there. We closed at 69, so we did get a RTX sell signal. We're still up on the session tonight, 73, looking at the grid. R1 76.70, the high's been 74.20, S1 1862. As long as we stay above 1856 in this pattern, we should be good to go. One of the things I do want to show you on the weekly chart here is that we're starting to see some amazing acceleration on PPM 1, 2, 3 is about to break through as well. So we are about to enter potentially the first really big uptrend, we'd have to go back to way over on the left-hand side of the chart around June of 2019 to get into this type of pattern that's unfolding here on a weekly. I've been talking about this thing for well over a year. It's taken a long time to get to this point. So far, we've been able to keep the market pretty stable without getting a rejection. So this is, I think, the key week in the pattern. The final market that I'll touch on tonight is Bitcoin. This is the weekly Bitcoin. We're continuing to see the PPM start to evolve. They're still in a negative phase, but we are above the 10-period moving average, 43.02. We're looking at the high so far, 43.645. 43.2 is R1 weekly. Looking for an R2, 44.7. Don't think we get to an R3. We've got a lot of resistance right at that 40-week moving average. Let's take a look at the daily. Daily range looks like what we're getting here is right up toward the STX. This will update in a couple hours. Right now, the high has been 43.645. 43.568 is R3. RXT 44.062. But look at these PPMs. They're starting to really accelerate, all three of them, plus 1.57, 0.56. PPM 3 is still negative, but it's above its first and second derivative. But even the 200-day continues to rise in this pattern. So that's going to act as a magnet for the markets to print up around 4,700. And there is some potential for a move around 50,000. But there's still a fair amount of work to be done. I think as long as we stay in this pattern right now above the 40,000 level, that's all that's going to need to happen to continue to see this momentum turn higher. Well, folks, this will do the video for tonight. As always, I appreciate you watching these videos, and make sure that you subscribe and like these videos and hit that notification bell so you'll know when I upload these videos. Thank you so much for watching. We'll talk to you tomorrow night.